Good afternoon, ladies and gentlemen. This is the Defion Productions podcast, the only live stream Bitcoin and crypto podcast in the Western New York area. I'm your host, Don, the hardest working nobody in Bitcoin, alongside Troy, the hardest working nobody in crypto. We got a lot to talk about this week. Episode number 81 of the hard working Bitcoin and crypto podcast. We're going to talk about many different topics, including Trump, Powell, bit bonds, markets, sentiment, fear, uncertainty, doubt. Start with the Bitcoin markets. We can pull up a chart really quick so I can kind of just run through where we're at. We're sitting at 85,671 with Bitcoin, 1587 with Ethereum, $2.07 with XRP. Total market cap sitting at 2.66 trillion. Finger Greed Index at 30. We can jump into stock market index really quick as the markets literally closed about 18 minutes ago. It looks like the Dow ended the week, because tomorrow's a holiday, down 527 points, 1.33%. S&P up slightly, 0.13%, and the the Nasdaq down 0.13% at 20.71. Troy, how you feeling, man?
Can't complain. Are you able to pull up the Bitcoin chart? I want to take a look at this. Pull up the Bitcoin chart. I think we had our first breakout, our first breakout of the year. Did you see that?
What do you mean first breakout of the year?
Click the ticker. Pull up the chart.
I got it.
Well, I use TradingView, but if you look at the last 3 months, it looks like we kind of are showing a reversal, which is some clarity. So I'm good to see that. But as far as alts and everything else, others D is getting annihilated. So I'm really keeping my eye on Bitcoin in the next following weeks. Like I said, we have services that, well, I pay for services using macroeconomic, like top tier people, and Bitcoin does have the green light in the next 3 months. But it is good to see that obviously this is the leader, it's the most dominant asset. It's good to see that it's starting to kind of hold that support level, 85,000 right now. So I'm feeling good, but I can't be emotionally tied to price action or like what happens with that noise. I'm kind of just looking at the fundamentals from a macro perspective. So, but yeah, I'm feeling good. How are you feeling?
I got this up to bring some perspective to the market. If we can bring this chart up real quick right here. This is the most significant chart in financial markets. It's Bitcoin measured with a 200-week moving average, aka 4 years at a time. Zoom out and the truth becomes crystal clear. Bitcoin has never lost purchasing power. What does this hint at? Bitcoin is the most reliable savings technology on earth. Look to the next tweet in this thread to see every other asset bleeding against Bitcoin. And then he shows in the next tweet, he's got a video here showing Bitcoin against the US dollar, Bitcoin against Tesla, Bitcoin against Bank of America, Bitcoin against JB Morgan, Amazon, the 10-year, Vanguard, and everything is just bleeding. Even gold. I mean, even though, we're going to talk about gold a little bit today as well, but even gold, oil, everything bleeding against Bitcoin. And when you zoom out and look at a chart like this and see the 200 moving average continuing to go up, it takes away all the bumps that we get from the volatility that people complain about and say, oh, you said Bitcoin's going to go up forever. What was 109,000 and now it's down to 85,000, or, it chip chops around and stuff like that. But when you look at the 4-year zoomed out view of Bitcoin, that 200-week moving average, which is what you want to take a look at, is continuing to move up. What do you have to say about that? Or what are your thoughts on that?
No, I'm glad to. Well, that's interesting to see the purchasing power. A lot of people's time horizons are very short-term thinking. So the bumpy roads, the volatility could definitely deviate, like throw you off on your plan. You really do have to zoom out in this market. I know it's crypto. I know people think it's, it's fast money, but it really isn't. And we already know if you've held Bitcoin for at least 4 years, you're in profit. The short-term holders, like, they're definitely feeling it right now, but this is not a short-term gig we're doing. So, I mean, this is our 81st podcast. If you were buying Bitcoin from the beginning of this, or at least dollar cost averaging, you're in profit. We're 2 years into this podcast.
Well, up heaps, 2.5 years. Yeah, you're up heaps if you've been listening to us since 2022.
That's consistency. And if you're consistently buying, let's say you were buying like 100 or $500 every, let's say 100 every week, $400 a month every time you shot this podcast, like you're in profit. If you're considered a long-term holder at that point, 2.5 years is pretty long term. So is just keep holding, keep dollar cost averaging. I've been buying. I've been finally raising some cash to buy more. So that feels good on that end. And I'm pretty much fully invested at this point. So I'm just letting my patience and just letting everything run its course.
Let's bring this one up real quick. This article, because this kind of is the reason why assets like Bitcoin, assets like gold, and even assets like real estate tend to run when things like this are happening macroeconomically. I'll read the article real quick and we can share our thoughts on what we think. Trump versus the clock. U.S. could run out of money by August. The U.S. government might hit oops, we're broke mode by August, or even as soon as late May, if Congress doesn't raise the $36.6 trillion debt ceiling. The Congressional Budget Office says if tax money comes in light this spring, Treasury's cash stash could vanish faster than expected. If Trump and Congress don't sort it out, get ready for delayed checks, missed payments, and a government that starts ghosting its bills. Wall Street's already sweating. Credit watchdogs are lurking. Tick-tock, DC. We've shown, and we can show it again if needed, but we've kind of shown that M2 money supply chart, and it lags, and it's already been hitting all-time highs. It's even higher than the COVID era. We're seeing an injection or an anticipated injection of liquidity coming into markets. They go to assets, which means that they're going to be printing. This is basically a fear tactic by media, mainstream media, or even Mario Narfal on X to scare people. They're going to raise the debt ceiling. Why? Because they've done it every single time before. They'll do it again. 36.6 trillion is just a number. They'll raise it up to whatever number it needs to be raised to, 37, 38, 40, whatever the case may be, which means they'll print more money. We got these tariffs that are going on, which are inflationary. Are they transitory or is it more permanent? That we're not sure about. That's debatable, but they're definitely going to be inflationary. We're going to have a change in tax receipts because spending habits are going to change, because either things are going to cost more or they're not going to be available because of the tariffs. So we're going to see a lot of shifting in consumer spending. Consumer spending is going to hit tax receipts, and it's all going to affect all of this. What are your thoughts, Troy?
Well, I like to see we have a weaker dollar, which is good for risk on assets. We see increased global liquidity. It has a 3-week or 10-week lag, so we see that. But yeah, we're at 99 on the DXY. So that typically is followed by some good momentum and risk on. So that's really important to see. Keep an eye on that too. That was strong in the beginning of the year.
Mm-hmm. Everything that
was very strong in the beginning of the year. Sorry, what were you saying?
Yeah, no, you're right. It was strong at the beginning of the year. And I think everything that we're seeing is pointing towards a launching pad for Bitcoin between local bottoms that we think we've passed, global liquidity rising, and just the place that we're kind of at right now where we are typically in the cycle is kind of a launching pad.
Yeah, commodities like gold's at an all-time high. Gold's ripping right now, so that's another leading indicator for risk on, because we see that the dollar is falling off a cliff. We see M2 global liquidity increasing. So everything, the fundamentals are there. We're just waiting for the fundamentals to catch up because it is lagging behind right now. But I feel like some of the for example, Solana today, it had a really good day today, and Bitcoin holding up really nice, some confidence in the markets now that we have some direction with the tariffs. So I like to see that Bitcoin's very sensitive to global liquidity and things that happen in real time, especially Solana, because it's like a higher beta of Bitcoin. So that's good to see. I know ETH, whatever, some of the other shit coins are lagging behind, but I'm seeing this going to be a good end of the year. And what threw me off was this cycle is much longer, much longer than I anticipated. I'm following the 4-year cycle, and Don, you believe like the 4-year cycle is less relevant every 4 years after the halving, and I can agree too. But I think this is gonna be a longer cycle, so that's actually better for us. And if we sit at 85K for another month or two, I mean, that's kind of like good. That's good for us, especially us that are holding for the longer term. So
Yeah, we were in danger for a little bit of, and my opinion would have been a complete break of the 4-year cycle, because when we were having all that tariff scare and we weren't sure what Bitcoin was going to do, and in retrospect it held up very well, but we weren't sure while we were going through it. There were certain levels that Bitcoin could have hit that would have thrown that statement that you made in regards to every time you go back 4 years, you can see that Bitcoin's higher than it was 4 years prior. We could have hit the low 60s that would have equated a price that would have been less than where we were in April of 2021, potentially, or at least it could have dragged out into May, where we were definitely in a higher price point into the 60s, because we hit the 60s, I believe, and it was like April or May. I'm not sure the exact date, but like we're getting right around that spot where we hit that first $60,000 price point in the 2021 cycle. And if we would have really bled like it looked like we were potentially going to do, we could have been in a place where we were actually lower 4 years later than we were 4 years prior. But the good news is Bitcoin held very resiliently, even more so than the stock market and some other assets that we didn't get to experience that.
No, for sure. And I'm actually looking at the NASDAQ right now. That got decimated. This is another thing I'm keeping an eye on. This still has no signs of a reversal anytime soon. But yeah, I didn't realize how wrecked the NASDAQ got. All equities got destroyed. Bitcoin's holding up. Honestly, the Bitcoin's holding up nice compared to a lot of these stocks, these assets that are in the S&P and the NASDAQ. So
I got the chart up. I got the chart up right now. The NASDAQ year to date is down 15.53%. So it's officially past correction territory, which is typically 10%. And it's looking like, one more big dip and it'll be in a complete bear market.
Yeah. From the all-time highs, it dropped 26%. And that's not good for an indices, so an ETF.
Well, that would be a bear market then. If it's 26 off the all-time high, that it's over 20 from the all-time high, it is a bear market then. Yeah, so it already is in a bear market then.
Yeah. Did you listen to Jerome Powell speak yesterday?
I did. And I texted you a little bit about it. I want to, let's put this up, this Truth Social post by Donald Trump really quick, because Donald Trump tweeted this, or Truth Socialed it, whatever you want to call it, really early this morning. The ECB is expected, and they did it after this tweet, cut interest rates for the 7th time. They cut it 25 basis points today. And yet, too late, Jerome Powell of the Fed, who is always too late and wrong, capital letters, yesterday issued a report which is another and typical complete mess. Oil prices are down, groceries, and he had to say even eggs, are down, and the USA is getting rich on tariffs, which is complete bullshit. Too late should have lowered interest rates like the ECB long ago, but he should certainly lower them now. This is huge. Powell's termination cannot come fast enough. So the president of the United States is basically calling out Jerome Powell and saying, like, you got to go. And I mean, I've been vocal on this podcast, and so have you, that we both think that we should end the Fed. The Federal Reserve is a joke and it should be eliminated. But with that being said, you have the president of the United States who is basically saying as much to the Federal Reserve Chair, Jerome Powell, who is definitely, again, and I said this a couple weeks ago, but the tariff stuff, I really believe, was more about the Fed and Jerome Powell than it was necessarily about China or any of these other countries. He was really trying to get Jerome Powell to blink into lower rates, and Jerome Powell stood firm. And if you listen to Jerome Powell speaking yesterday, it was very hawkish. And he didn't seem to really be, he did mention that obviously the tariffs, the changing of the amounts almost on a daily basis are definitely making them have to reconsider and take a look at things. He didn't make any statement that were dovish to say that, well, we're going to be lowering rates at our next meeting, or we're going to lower rates 3 or 4 times. None of that. It was very hawkish. So you have a standoff going on currently between the president of the United States, who's very unpredictable, and Jerome Powell, who has been pretty predictable because he is kind of right, Trump, in his tweet to say that Jerome Powell has been late and wrong, because we've both even said it when he started raising rates in 2022. It was definitely too late. He definitely did it very late. And now in the lowering of rates, I would say that he's also late in the lowering of rates. What are your thoughts?
Yeah. I mean, it looks like it's egotistical contrast between the two. I don't know what Trump could do to force his hand, which, he already attempted to do it. He's not budging. Jay Powell's not budging. So, they're at an ego battle as we speak. Does Trump even have any dictatorship over who could be in the chairman, or is that completely out of his control?
He could remove Powell, right? But then he has to put forth somebody else that has the qualifications that's in the board of governors to replace Powell. The Fed is an independent organization, separate from the government, separate from the executive branch, separate from the government. So anybody that he puts in isn't going to be somebody he can manipulate, because they have a dual mandate, which is separate from the federal government. And yes, he could remove Powell, but here's the thing. You remove Powell in the middle of a term, what does that do to markets? What does that say to markets?
Something's broke.
Yeah, it says something's broke, and it sends things into a tailspin. It reduces confidence in the United States. It reduces confidence in our dollar. Now, again, some of those things might be the end goal for the United States, but in the short term, that really puts a wrench in what he's trying to do with tariffs, because that screws up imbalances, these trade deficit imbalances that he's really trying to go after. Removing Powell would throw a wrench in the global economy and send things into a spin that I don't think he's ready for, or we're ready for happening. So he's in a catch-22 right now. He wants Powell to do these things, and he's threatening Powell and making these tweets. But like Powell said many times before, like, he's not going to bend his knee. He's not going to do what Trump says to do. And if Trump removes him, Trump removes him. He plans on finishing out his term, and he's going to act accordingly.
Yeah. Well, talking about old people in the industry, let's bring up Gary Gensler, because he was just on CNBC going full Bitcoin maxi on basically his whole stance is changing. Are we able to play this?
Yeah, I'll play it.
It's pretty long. Maybe it's 4 minutes long. Maybe we'll just play a little bit of it. But
we can play we could play the first couple minutes.
Here, you can ask.
A question for you.
Hit that
as
bottom
you
right.
probably watched. So many CEOs were doing almost victory laps in the crypto world as these enforcement cases were dropped by this current administration. Cases that you had brought. As you watched that, what did you think?
Look, I'm going to step back a little bit from any individual cases and just say this again to your viewing public. This is a very small part of the financial markets, but if you were interested in this, think about every financial asset sort of trades on a bit of fundamentals and sentiment. But this field is almost 99, or maybe one might say 100% sentiment and very little on fundamentals. And while something like Bitcoin may persist for a long time because there's 7 billion people around the globe, a real keen interest in it, there's 10 or 15,000 others of these tokens. And to think through your own risk, your own personal risk about where are the fundamentals. And if this is just about sentiment, then generally those don't end up well, and most then go down.
Are you talking, you're contrasting Bitcoin with the other ones, or they're all the same?
Joe, I'm glad that you spoke up, because I know you're a bit of a Bitcoin enthusiast and think less well of the rest of those. It's how you and I have always connected in the green rooms. Right. But think of these 10 or 15,000 other tokens, and just on the economics, just on the fundamentals, what are the fundamentals?
No, I know, but that was my question. You throw Bitcoin in with the rest of them, or do you think Bitcoin is different is qualitatively different than the others?
I think there's the distinction is similar to in metals. There's only 2 or 3 precious metals. We humans have a certain fascination with 2 or 3 precious metals like gold. I don't think we humans will have a fascination with 10 or 15,000 meme or sentiment tokens trading over the years.
Gary, I wanted to actually ask you.
Yeah, so we could take that screen out and get back in. Gary Gensler going full Bitcoin maxi. Could you hear it, Troy?
Yeah, I heard it.
Yeah, so
Gary. It makes sense. He kind of always kind of had that stance. I mean, he did like Bitcoin, and he did say it's a commodity, but like these meme coins, like who's gonna have sentiment value over fart coin in 10 years? You know what I mean? Like he did have a valid point there, and I'm happy to see that because I know we've had our indifferences with him. So
I think that he said basically what he should have said when he was the SEC chair, because we would have got a whole hell of a lot more clarity and things wouldn't have sucked so bad from 2022 to 2023 if he just would have said what he said there, that you have Bitcoin and everything else is a shitcoin. He said that in very diplomatic politician speak of basically saying Bitcoin is the king and everything else is a shitcoin, and why waste your time with anything else. That's what he just said there. That's basically what Gary Gensler just said in that 2.5 minute clip that we just played. And I tend to agree with everything he said.
Yeah, sounds like you guys would be some good friends.
Yeah.
On the pod.
It's sad that he taught at MIT a class on blockchain and Bitcoin before he became the SEC chair. We had high hopes that he would be an advocate for us. He got corrupted by the Democratic Party, Elizabeth Warren, Biden, and his cronies. He came in and did an awful job as the SEC chair. And now here he is on CNBC in the twilight of his career, saying all the things that we wish he would have said in 2022. Like it's sad because he was the chair of the SEC. He had a job. He was being paid by the American people to do that job. And based on his qualifications and expertise, he could have said what he just said there in 2022, but he chose not to. He chose to be corrupted. He chose to take whatever deal he was given, whatever that may have been, or maybe promise that was given to him that maybe wasn't kept. I don't know. But we could have used that in 2022. That, what he just said there, would have been more valuable in 2022 than it is here in 2025 talking about it on a podcast. Yeah, it's nice to hear, but the value need was there in 2022 and we didn't get it. So that's kind of my stance and where I sit on what I saw yesterday on CNBC from Mr. Gensler.
Awesome. All right, let's talk about the yearly candle for the S&P 500 priced in gold. So if you're denominating the S&P 500 in gold, it's down 71.8% from the high 25 years ago. Sitting on gold under your mattress has literally outperformed stocks for the entire 21st century. Some Bitcoiners like to hate on gold, but it's still king and deserves respect. And you can see the chart right here. Wow. This is, you're using you're using gold as a denominator. And you can see we just kind of been in a downtrend since 01. Holding gold since 01, you're outperforming stocks. That's insane. I honestly didn't even know that. So you pulled up this chart. That's really cool.
It's gold is really ripping, and it's good to see because like anybody that is out there that knows my backstory of how I got into Bitcoin, it's through gold and silver. I actually, it's funny. I sold some silver a couple of weeks ago and bought some more Bitcoin with it. But that's neither here nor there. But gold is the analog. We talked about this. This is a conversation that me and you had offline. Gold is the analog version, right? And the analog version worked for 5,000 years. and it's still in some respects still working. But we're moving to a digital age. And the one thing that I hear so often, I hear you even speak about it too, but I hear it very often, is AI. We're talking so much about AI, what AI is going to do, where AI is going to go. AI lives in the digital age. AI is all computer stuff. So it's only natural that we make this switch from the analog world to the digital world. And when we do that, we're going to need to have value on that digital roadmap. Gold doesn't work on the digital roadmap. It works on the analog roadmap to an extent, but even still, we still don't even know. I mean, we're what 2 months into the presidency, and we still don't know how much gold we have as a country. We don't know what's at Fort Knox. Like, we don't even know how much other countries have. We have no idea how much gold exists on the planet. We guesstimate, we think we know, we make assumptions, right? But Bitcoin doesn't make assumptions. Bitcoin gives you verification. We can verify how much Bitcoin exists today, how much Bitcoin will exist tomorrow, and how much Bitcoin will exist for the end of time. So Bitcoin is perfect money for the digital age, which is where we're going. We're not there completely yet. Okay. It sometimes it seems like we are. Sometimes like you think that like we've gone full technologically digital, but we haven't. Right. And I think what we're seeing, gold's last stand, this is the analog last stand. This is gold and the analog system's last stand, right? We're giving gold its proper send off. Gold is giving us its last hurrah, showing us, and we're giving it respect for what it was for as long as it was. But I truly believe at some point soon, I can't tell you exactly when that's going to happen. I don't know if it's going to happen this year, next year, the next cycle, 10 years from now. I'm not quite positive time frame. What I do know is the inevitability is that value is going to shift from gold to Bitcoin. Will gold be worthless? Of course not. It won't be worthless. It'll still have its place. It'll still have some value. But when people think in the future, like the future people in our generation are going to look at Bitcoin the same way that people look at gold today. Safe haven, store of value, asset. That's where the things will go. And in future economic crises, you won't see Bitcoin just surviving or holding. You'll see Bitcoin doing what gold is doing now, but on a much grander scale. Gold went from like 2,800 to 3,300. Awesome. Huge move. Great. Awesome stuff. But you're going to see something like Bitcoin go from 200,000 to 500,000 in the blink of an eye, or something along those lines or that effect. What are your thoughts on that?
No, I completely agree. We're not fully transitioned into the digital age, but this is going to be the transfer of value we see over the next 100 years. And I'm actually looking at the gold chart right now, $3,327 for an ounce of gold. And this looks like a blowout. Like, this chart is straight up, Don. Like, this is straight parabolic. So I do anticipate a pullback here eventually.
It's up.
Yeah,
it's up 40% in the past year.
Boomer. Yeah. No, I mean, you have to give credit where credit's due. For the boomers or just anyone in general that's held gold for the last 20 years, like, you're outperforming stocks. And in this chart, like, this is good. But as far as like the digital age we're going into, it just only makes sense that value is going to transfer to gold. Like, what is AI going to use? Like, is AI going to take bricks of gold for payment, or is it going to be something that's a digital like transact, like currency, like Bitcoin? And I think really that's kind of where we're headed.
Really quick, I want to show you. Let's go back to the chart. This is a 5-year snapshot of gold. So gold is up 96.56% in the past 5 years. Great return, phenomenal return. Bitcoin's up 1,069% in the past 5 years. So even still, with gold's huge moves that it's making, Bitcoin is still 10xing gold just in 5 years. 5 years is the 2020s. It's not like 2017. It's not like 2013 where we're talking about hundreds of dollars of Bitcoin. We're talking about like post 20K Bitcoin, right? Because 20K Bitcoin was in 2017. So we're talking about from 2020 to 2025, we're sitting at a 96% gold move and a 1,000% Bitcoin move. Now, if we go back 1 year,
Well,
gold is up 39.8% in 1 year, and Bitcoin is up 38.5% in 1 year. They're almost identical. That's wild. That part is crazy. So gold is up slightly more, 39.8%. But here's the thing. Gold is at an all-time high. Bitcoin's 20% off its all-time high. And it's still up 1% less than gold. So one is at an all-time high, and the other is 20% off its all-time high and only 1% less than the one that's leading. That's basically leading the charge now. That's crazy. When you start to look at those charts, it's just wild. Like what we're seeing, and it's you can't stress it enough. Like you get, and I had some back and forths this week on social media with people that are terrible at just zooming out at charts. Like everybody is like, what happened in the last 5 minutes? Everybody wants to look at a 5-minute chart or a 1-day chart or a 1-month chart. Like if that's how you invest, man, you're going to go broke. I don't care how much money you made in real estate. I don't care how much money you made in the stock market. If you are unable to zoom out at a chart and look at it for 5 years, 10 years, 20 years, you're eventually going to, you're not going to be where you need to be. You're not going to make it, especially to new ideas. And again, I revisited a conversation with somebody that he obviously, here's the problem when you debate certain people, they have no willingness to learn, understand, and implement new information. They have their echo chamber and they're just going to spout off and gaslight, and they're not going to take in new information. They're only going to try to tell you that they're right, and they don't want to hear anything new. So I had a little back and forth with somebody that was talking about how real estate's great and how he's made millions of dollars in real estate. And he was asking me how much I made in Bitcoin, and he made more in real estate. And yeah, and it's like, it's such a closed-minded, narrow view. Like we can just take a stock, right? And we can look at a stock chart. We could look at Tesla's stock from 20 years ago and Tesla stock today, and somebody that invested in 20 shares of Tesla 20 years ago, and somebody that invested in 20 million shares of Tesla 20 years ago. Does it matter that the one person that has more USD value of Tesla is doing so much better, or does it have any effect on Tesla as a stock because two people put two different nominal amounts in, right? Or you can just say somebody had, again, the same 20 shares of Tesla, whatever that value is, and somebody bought one property, and that one property that they bought was worth $1 million back then, and today it's worth $2 million. But the Tesla stock, that 20 shares, has gone up 50x, but the $2 million property is still worth more than the 20 shares. The Tesla investment has a higher nominal X than the investment in the real estate is, because the real estate did a 2x. Tesla might have done a 50x. So putting money in Tesla was a way better place to put money. But just because the one guy didn't put as much in that and the other guy put more nominal value here doesn't make the real estate a better investment than Tesla stock. It's such a closed-minded viewpoint when you're viewing two things. Like it doesn't matter what one person put or where they put their money. All that matters is which return was a better return on investment than the other, not how much USD value does one portfolio have than the other. That's an irrelevant argument when you're talking about which investment was better ROI.
Yeah, you got to look at the percentages, not like the nominal value.
And people get caught up in nominal values of every investment. Like they worry about, it's number bias, right? It's even when you talk about crypto, it's like you have these people that want to buy these coins that are $1 or $2, thinking they're going to become millionaires and change their life. And it's like the risk value is so much higher when you buy that $1 or $2 coin and you pile all your money into that coin than you put it into something like Bitcoin that's been established.
Yeah, no, for sure. I don't know how much time we have here left, but I do want to transition into El Salvador president coming into the Oval Office with Donald Trump. We'll pull up that thread right here.
Yes, El Salvador.
We'll just play the video. It's about.
Yeah, I'll play the video. Let me get back to.
Yeah, hit play, then expand it. Yeah, that's fine.
We're here to help. We know that you have a crime problem, a terrorism problem that you need help with. And we're a small country, but if we can help, we will do it. And we actually turned the murder capital of the world, that was the journalists call it, right? Murder capital of the world, into the safest country in the Western Hemisphere. And, if sometimes they say that we imprisoned thousands. I like to say that we actually liberated millions. So,
It's very good. Who gave him that line? Do you think I can use that?
Yes. And in fact, Mr. President, you have 350 million people to liberate. But to liberate 350 million people, you have to imprison some. That's the way it works, right? You cannot just, free the criminals and think crime's going to go down magically. You have to imprison them so you can liberate 350 million Americans that are asking for the end of crime and the end of terrorism. And it can be done. You're doing it already. And I'm sure that people have seen the change in the streets. A long way to go because you're just initiating your second term. But it's clear that, with the numbers at the border, even in Democrat-run cities, they get a help from the work you're doing. So I'm really happy to be here, honored, and eager to help.
So we can read the top where it says El Salvador president issued a challenge to Trump. You have 350 million people to liberate. This wasn't a photo op. It was a mission briefing at the White House. El Salvador's president, Nayib Bukele, looked President Trump dead in the eyes and said, you have 350 million people to liberate. Bukele isn't just talking tough. He has the results to prove that it can be done. We turned the murder capital of the world, that's what the journalist called it, into the safest country in the Western Hemisphere. Critics complain about mass arrests. Bukele fired back. Sometimes they say we imprisoned thousands. I like to say we liberated millions. Such a good line. Trump grinned. That's very good. Who gave them that line? Do you think I could use that? Then Bukele hit the heart of the problem. To liberate 350 million people, you have to imprison some. That's the way it works. You can't just free the criminals and think that crime's going to go down magically. You have to imprison them so you can liberate 350 Americans asking for the end of crime and the end of terrorism. No fluff, no fantasy, just facts. This is what happens when real leaders speak truth. America is finally ready to listen. Bukele, for those that don't know, and if you're watching this podcast, I don't know how you couldn't, is the president of El Salvador, and he is notorious for basically turning that country into a Bitcoin standard. And a big reason why they've turned things around the way that they have is because of the fact that they're on that Bitcoin standard. I don't want to say eradicate because you never eradicate anything totally, but he definitely significantly reduced the amount of crime that occurs in that country. And Bitcoin was a big reason how. And there was definitely some double speak in that speech when he was saying liberating because change the money, change the world. And I really believe that Bukele understands that fundamentally, which is why he made that decision. And, we saw this conversation for the cameras, but I'm sure that they had conversations behind the scenes. And Bukele was in Trump's. How wild to think that a little ass country like El Salvador has the world stage to share with Trump in a big cabinet meeting, in a big Oval Office meeting for the world to see, like that conversation, and then also to be able to bend his ear back when there's no cameras around, and just imagine the types of conversations that they had, and specifically about Bitcoin.
Do you think they had a conversation about the Bitcoin standard and how he thinks it's prevented crime in their country? Do you think
100%.
He at least came up?
100%.
Yeah.
Without a doubt. No doubt in my mind. No doubt in my mind.
Now, for the viewers watching, can you dive into this? I don't know how much time you got a meeting soon, but I do want to talk about why Bitcoin is liberating people and why it's so good and reduces crime for a country like El Salvador, which was the murder capital of the world.
Yeah. So to try to do this as quickly as I possibly can in a short amount of time, the basic concept is that when you have a debt-based system and you have a world reserve currency like the United States dollar that runs that system and has nothing backing it but the full faith and credit of a country that's military, the military industrial complex basically backs the dollar. The way that you continue to exert force is through wars. and through pillaging other countries, because that's what you do when your dollar's backed by nothing, and people that are close to that money printer are enriched by the expansion of the money supply, which is what we've been doing essentially for the last 50 years since we got off the gold standard. You print more money, and the people that are close to that money printer reap the biggest benefits. And what you end up doing, the people the farthest from the money printer and your middle class gets hollowed out, which is what we've seen. So we get a lot of smoke and mirrors from our politicians, and even people like Trump, who are, populists, rise to power because so many people can relate to the fact that the middle class is being eroded away. And it's not like it was for our parents or our grandparents. And we know it, we can see it, we don't know why, and we need somebody to come in and fix it. The unfortunate reality is, if you're not going to fix the money, you're not going to fix the problems, which again is why I've been passionate about arguing with people or debating people for the past couple of weeks about these tariffs. Like, these tariffs are not going to solve any problems, nothing long term. It might solve some intermediate or short term problems. Sure, we might be able to get some trade imbalances a little bit better in our favor, but the main fundamental problems of this country are not going to be solved through tariffs. They're not going to be solved through immigration. They're not going to be solved through any of the things that Trump campaigned on. I'm sorry, it's just not going to happen. If you're expecting that, I hate to be the one to break the news to you, but you're going to be disappointed. If you don't change the money, nothing changes. If the money printer doesn't get eliminated and we don't back our money with something hard and sound, even if that's gold instead of Bitcoin, even though I don't believe that would be the case, nothing's going to change. The middle class will continue to be hollowed out. Inflation will continue to persist. Your life will continue to get worse and worse as the generations go. So all this bullshit about tariffs and trade imbalances, and we got to treat China a certain way, and we want everything to be American made, it's all nonsense. It's completely nonsensical. Anybody in economics with half a brain understands that if you don't change the money, nothing will change. We just showed you an article about 15 minutes ago about them having to go to Congress to raise the debt ceiling. You literally have something called Doge right now, which has been sold to you as this saving money for the government and reducing the deficit, which none of which is occurring. They're shifting where they're wasting some money to other places, and they're continuing to print. And the $36.6 trillion deficit is going to have to be negotiated to something higher, which means that we're continuing to print money, which means that we're continuing to hollow out the middle class, which means that eggs and gas and everyday items are going to go up, and wages are not going to keep up, and things are going to continue to occur. When that happens, money gets sent to Ukraine, money gets sent to Israel, money gets sent to a ton of other places that you don't even realize, because we send the money out there because the exporting of dollars of a debt-based currency that's not backed by anything helps the people closest to the money printer put the money out there and enriches the richest of the rich. That continues to happen. And then we have these bullshit conversations. But I heard Elizabeth Warren this morning on CNBC, and I almost vomited because she's screaming about we need to tax these billionaires. And she keeps calling the taxation of billionaires. Like, that's going to do nothing. You can tax the billionaires every dollar that they make. It's not going to do anything, because it'll just get reallocated back to the same people that you took it from, because you have a debt-based system and a broken money system. Bukele realizes that. So Bukele got off whatever, I don't even remember what the currency was for El Salvador. I don't know off the top of my head, but they started to put their balance sheet, Bitcoin on that balance sheet, and things started to change, because when you fix the money, then you start to actually fix problems. Because you can't just print your way out of every single problem. You have to be fiscally responsible, because you don't have an infinite supply of money to just throw at every single problem. So then you have to get laser focused on the things that actually are worth your time and energy and money, because it doesn't have an infinite supply. When money has an infinite supply, you can throw it at every single thing in the world, and it doesn't matter. All you do is inflate the supply, increase the supply, and the people that aren't close to that printer, which are me and you in the middle class, and everybody else in the lower sphere of the classes, gets crunched. And we're trying to make more money, but we can't. And every single facet of our life gets worse. And it just continues to go on and on and on until it eventually breaks. The only way to address this is to break the system.
Wow.
But nobody's going to subscribe to that. And that's where we're at.
Don, what you just described there was a Ponzi scheme.
You can call it that. I mean, I've called it that.
Well, we can wrap that up there then. I like
People
that.
disagree. People disagree. People disagree because they don't understand the system that they engage in, which is, again, goes back to when I have conversations with people about Bitcoin. If you don't understand the system that you're in, you're never going to understand Bitcoin. If you don't know what a debt-based system is, if you don't know that we can print money at will, if you don't understand why things in the world are the way that they are, if you don't know why wars are fought, if you don't know why we send money to Ukraine or Israel and all that nonsense, it's not the right, it's not the left. This is how things have to be done in a debt-based system. And if you don't get that, you'll never get Bitcoin. This is why gold is running. Not just this. Take Bitcoin out of the conversation for a minute. This is why gold is running.
Yeah.
Yeah, man, there's not much else to say. If you don't understand, like Satoshi said, we don't have time to explain it to you. The train's moving. We're doing our best. We're doing our best here in this podcast and trying to educate as many people as we can. But if you can't keep up, man, you're going to get left behind. And your real estate works now, and it'll work for a while. But when things transition, like, here's the thing that real estate people don't even realize. Like, the only reason why real estate has ran to the prices that it's run to and you're getting such a good return on it is because people are trying to escape the dollar into things that can outpace the decaying buying power of the dollar. And people figured out that real estate could be one of those places. You can buy an investment property or a property, make it an investment, and park some cash in it. And that's what people have done. And it's a longer conversation, and I don't have a lot of time. I want to kind of wrap this up, but when the system starts to really like fall apart and real estate starts to fall like it did in 2008, but we saved it. We had to save it. We didn't let the system fall apart. But when the system truly does fall apart, you're going to be stuck holding the bag. And you want to be in sound assets and sound money. And if you're not, when the music stops, you're not going to have a chair. And that's up to you to decide how to act in that scenario and act accordingly. A little bit shorter one today because I got to jump on a meeting. But our pleasure to do this podcast. And as always, like we always on the podcast, don't trust, verify. Thanks for watching. Subscribe to all the socials. Share this with your friends and support the only live stream Bitcoin and crypto podcast filming in the Western New York area. Peace out.